markets would now be positioning themselves to really capture the upside or the downside from that big event which is due on 10th. That's Q3 numbers from Infosys. What are the expectations? Let's discuss that with Viju George, Executive Director with JPMorgan. Viju, good morning and thank you for joining us. Before I specifically talk about Infosys, let's talk about IT in general. 2013 has turned out to be a good year for Indian IT sector. How do you see 2014 panning out? And on top of a good 2013, can we expect strong returns in 2014 as well?
Sure. First of all, at the outset, let me wish all of you and all your viewers a happy new year. May this year be fulfilling. I think we see 2014 being a good year for IT, for the Indian IT industry, business-wise. The top-down view looks pretty positive. But I would say, don't extrapolate the stock returns you've had in 2013 to 2014. 2013 was helped by a host of factors. One, of course, was the re-rating, the cyclical bounce back, the rupee depreciation, and of course the fact that the Indian IT sector was probably the go-to sector, amidst domestic difficulties in 2013. These factors may not play out to the same extent in 2014. So while I expect a good year business-wise for IT stocks, for IT sector in general, I think stock returns will be far more measured, and I would put a 10 to 20% range to it in terms of returns for this coming year.
Viju, expectations from Q3 earnings, can seasonality really play spoil sport this time?
No, I don't think so, because I think seasonality is now well understood. So that should not really be a cause of concern. I think what is different, maybe for the last couple of years is that, the furloughs and the slowdowns that you typically have in December quarter is extending to, even the services industry as well. So it goes beyond telecom, high-tech and manufacturing and develops financial services, retail, etc. So I think that is well understood now. I think the focus really would be on CY14, budgets, decision making, from various geographies and so on and so forth. So I think the street will move beyond, moderate expectations due to seasonality slowdown in the December quarter.
So what are you expecting from Infosys? Are markets already discounting a possible guidance hike, or could there be disappointment if Infosys decides not to improve or not to increase their FY14 guidance?
Yeah, so that's a tough one now with Infosys, given the seesaw we've seen in the last few quarters, years. I think with Infi, the guidance raise, it's 9 to 10%. I think a guidance raise of at least a couple of percentage points is already factored in the system. Partly because once you have Q3 behind you, you really have only one more quarter, and as per our expectation, unless they do a 5% QOQ decline in Q4, there's no reason to keep the guidance at 9 to 10%. So I think, yes, there will be an increase in guidance, and I think there will be an increase in guidance by 2 percentage points, so 9 to 10 could get revised to 11 to 12. Specifically for the quarter, I would expect, the top line growth, including cross-currency benefits, to come anywhere between 1.5 to 2% sequentially, the top line QOQ growth. But I think the focus really on Infosys would be on margins, because I think that is a lever that they can effectively pull in the near term. So hopefully margin expansion of at least 100 basis points will be seen. And more importantly, I would probably also look for commentary on around attrition. Look at the attrition numbers, because that's been high now for a while, and get a little bit more clarity about the changes that they've made recently. So I think, with Infi, the focus really will have to be in attrition, on margins, and management change, and the logic behind all of this.
Viju, you mentioned that management changes, investor or focus is likely to be on organizational changes and recent exits this time around. Is the final structure finally emerging, or will it be BG or Rao taking over from Shibu? What about Rohan Murthy factor as well, because the markets are quite perturbed about that too?
I don't know whether the final structure is emerging. I think they're trying to get to the final structure, but whether this becomes a final structure is something that only time will tell. The reason I say this is that there have been moves made by Infosys post Mr. Murthy's return in terms of expanding the the EC and then disbanding it as well, effective April 2014. So I think, with Infosys, no move really is cast in stone. So they're open up for review if things don't work out along the way. But the signals at this point in time suggest that they've identified two people who they think can take Baton over, and they want to fix the leadership issue and bite the bullet, before it just gets too late. So I guess that's a signal we're getting from this. In terms of Rohan multi-factor, I would not like to comment on that.
Do you see possibility of Infosys carving out product platforms and solutions in a separate subsidiary, and will hiving off of the Infosys 3.0 have a material impact, and how will this change the way analysts now view the stock?
Not really, because PPS right now, product platform solutions, if you ex-Finacle, is probably just less than a couple of percentage points really, in terms of contribution of revenues, 2 percentage points. This is a business that's very different in its dynamic. It's very different in its culture, in its risk taking, in its business model, essentially, from the parent IT services business. So having it up as a separate subsidiary with different owner, with an independent P&L, independent management, independent status, really, I don't think is a bad idea at all, because I think fundamentally this is a different business, from the parent IT services companies. And I guess, if you see a parallel, TCS has pretty much done this with the small and medium business segment as well. It's in a way, headed separately. It has its own HR policies, has its own product specialists, etc. So in a way, you hive it off in a separate part of the company. Yes, in TCS it will not necessarily be a subsidiary, but it is by itself an independent entity. So I think, that goes in sync, that is in sync with the dynamics of the business, which is so different from IT services.
So what about TCS then, Viju? Will it continue to outperform the sector? Are valuations now looking fully in place?
Yeah, so TCS is a kind of a story where, there is absolute confidence about it being able to keep the momentum intact. But from a valuation perspective, we think that this is a stock to always own, on attractive, when on declines. So if the stock corrects to, maybe 2,000, 2,100, then I think there is a quick 15% return to be made on the stock. So at this point in time, do I see 20% returns on TCS? I think the answer is no. But it's a stock that, I'd always like to come in when I think a good 15-20% return is, potential is there. So from a valuation perspective, it probably appears a little bit full now, unless we think TCS can do a lot higher, and maybe touch 20% dollar growth in FY15, which we're not forecasting for now.
TCS is growing, and how? And the stock is up 8x from 2008 lows. You expect both Wipro and HCL Tech to post a 3% growth. What is your take on HCL Tech and Wipro?
So we have an overweight rating on HCL Tech. It's been one of our key picks for a while now. Valuations are favorable there. There is, of course, the longer-term concern that that the company is not doing much outside of infrastructure management and needs to, build more diversity in its business model. But I think the traction in infrastructure management for 2014 is so strong. HCLT is a good net gainer from that. That I do believe that at least for the near term, you won't have a problem there. So we still, keep overweight waiting on HCL Tech. Our price target is 1,400. Still 10% from here, despite the run-up we've seen through all of 2013. So we're happy with that stance. With Wipro, I think it's a little bit of a higher risk bet as we go into 2014. Clearly, they've wrestled with a lot of internal issues in the past 3 years. I think they've put a lot of that behind them right now. Their sales strategy is more refined. Their account management strategy is more refined. And the delivery is increasingly, getting to be more certain, if you will. So my sense is that, the historical drags that have held Wipro back due to real estate, due to the fact that the environment was probably not as conducive as it is now, might not be there to the same extent as before. So we think Wipro can sort of level with Infi on dollar revenue growth, perhaps going into 2014 or FY15. So for us right now, it's one of the stocks to watch out for, but we keep a neutral rating on the stock, particularly given the run-up it's had, in the past couple of months.
Viju, finally, are there one or two challenges for the sector that you would like to touch upon for 2014, particularly in the context of the US immigration bill, which is currently on the back burner?
Well, you can never say that the problem is reduced to a zero. That is a zero issue right now. But I think the tail risk of the immigration bill have substantially, diminished. And I think that even if, the House is debating its version of the bill, assuming it gets it out, I think it will be a far more diluted version of the Senate. And that should not really essentially disrupt the business model of IT services companies, unlike the outplacement or the displacement clause. So I'm actually quite comfortable, in that sense. Obviously, this is an event that needs watching. But I think, the momentum that you'd seen with the bill, say, between May and July of last year certainly has dissipated. From a worry perspective, I just, would like to, probably see how margins would shape up if the rupee were to appreciate back. Because it becomes very difficult, for us to judge, how much of investments companies have been making in their business models, which they can pull back on, which can withdraw or which they can sort of keep back in case the rupee appreciates, because the rupee has depreciated by over 40% the last 2 years, yet TCS margins just up 150, 200 basis points. So I think that really is the worry to me. What if the rupee depreciates? Will margins of companies stand exposed? That is more the worry. I don't think we worry on the demand side so much.
We do appreciate your time and thank you for joining us.